All right, welcome everyone to another podcast. And my name is Seewing from the Year Real Estate Network. And my special guest is Maureen McCann from Spartan Invest. And how are you, Maureen? Welcome.
I am terrific, Seewing. I'm looking forward to what curveball you're going to throw at me today, since there's no prep here. We're just going off the cuff. So what you got for me, Seewing?
I love being spontaneous because it challenged both of us, and the kind of thing we do in this realistic space, because we have so much vast experience wise helping people, and so we just love to engage and speak our mind and be spontaneous and be real, being authentic, being transparent, and so we can provide good value for those people out there who listen to our podcast. Am I right, Maureen?
Let's bring it.
Yeah, exactly. All right, today's short episode, and let's make it real short, let's talk about new construction, new builds. All right, let me go with the pros and cons. New construction, as we know, is a very desirable product, especially for primary home buyers, right? I mean, we all talk about it. I mean, would you rather buy a resale older home where it requires a lot of maintenance and fix up and what have you, even at a lower quality neighborhood? Or would you want to buy a new construction home? Typically a single family home, cookie cutter, single family home, 1,300, 1,600 square foot, 3-bedroom, 2-bath, nice backyard, extra space, extra bedroom for home office, whatever. So in a suburb and all that. So here are the challenges. We all, you experience what's happening in the past 2 years, right? With the home builders, right? The home builders, because of the pandemic and COVID-19, because of the supply chain disruption, labor shortages, and the cost of materials of constructing a home, cost of lumber, the cost of lumber has skyrocketed around 12 months ago, and the delays in the supply chain, getting the home builders getting the permit is being delayed, getting the appliances for the house, the doors, the windows. I mean, it's a massive delays, right? And the home builders have to raise their prices exponentially in the past 12 to 24 months. And even with the war going on with the Ukraine and Russia, the supply chain is further being impacted because of the oil situation, the logistics of transporting materials from one area to another is impacted, and with the inflation. So the new builders they're ramping up. I mean, there are two ways to sell, to increase supply or inventory. Now we're experiencing a record historic low in supply of inventory. We all know that, and the demand for homes are massive, right? So home builders, we're not talking about primary homeowners. Now, home builders are really trying to ramp up. There are massive delays going on, as we acknowledge. But even when home builders have inventories available, their demand is so high. Oftentimes, the primary home buyers they have to be in a lottery system, or they have to camp out, in a long line, right? Overnight, like people bring their tents to sleep overnight so they can be first in line to reserve the lot for the new build, right? We've been hearing that for the past few years, a couple of years, and home builders, especially national home builders, even regional local builders in different markets. The only way they can profit is they have to build higher price homes so the profit margin works. So what I mean by higher price homes, most of those homes, depending on which market, of course, most major home builders, they rather build homes in the $500K to $1 million range or higher. That's how they make the money, their profit margin. So it's very difficult for national builders to build entry-level homes, the homes that are $300,000, $400,000, $500,000. To me, that's entry level, single family homes for primary home buyers, right? So we see the challenge now. Let's say you are a real estate investor. You want to buy a cash flow investment home in a market that where you can cash flow. You can put 20% down payment, and the renter will pay off all your monthly debt obligations, your monthly mortgage, taxes, insurance, property management fee, 2 or 5% vacancy factor, 2 to 5% occupancy factor, and still have a little bit of monthly positive cash flow, right? This is your blueprint as a risk investor. The problem is, if you want to buy a new build, which a lot of people want, because new builds, right? Very little maintenance, very little upkeep. You can potentially get the best quality tenant available. Is in a better neighborhood, because builders are usually built in a much better neighborhood for the long term, right? Population growth, job growth, all those economic drivers. But the problem for real estate investors are most builders does not build for investors. They are off limit to investor, right? That's one problem. Another problem is those hedge funds, those built for rent, like institutional Wall Street, like BlackRock or Invitation Homes. A lot of those Wall Street hedge funds, they're working with home builders to build like 500 or 1,000 homes to rent, build to rent. So they take away a lot of those new homes inventory away from the primary home buyers out there. So they limit people's ability to buy those homes, especially the entry-level buyers. And again, most home builders are not open to investors. So some home national builders are open to investors, like they allocate maybe 5% of their tract homes in their community to investors. But in order for investors to be able to access that, they have to work with a local network individual that have a relationship with those local builders in order to access those homes as an investment. And finally, what else? So what are the choices? What are the opportunities for real estate investors that want to buy a single family home for brand new for like $250K, $300K, $350K? You know, where can people have the connections and relationship to access these homes, right? And if you can find this unique relationship of builders and network providers that can allocate these new homes for real estate investors, then that is a precious thing to have, to connections to have, right? Do you agree with me? So Maureen agree with me. So at the end of the day, you have to connect yourself to a network, to a community where some builders and some specialized real estate consultants out there in the country, they have access. They can build these new construction homes that cash flow in the good markets, and you can make money off it, strictly to investors only, right? And you can find that. Let me give you an example of a home that you would typically want. So this is a typical blueprint of a new construction home that you want as a real estate investor, where the numbers make sense, okay? Maureen, are you still there? Can you say something?
Yes.
All right, okay. Yeah, I'll get to you in 2 minutes, all right? Maybe less. So this is a typical home, you know, investment homes or cookie cutter. I mean, something like this. If it is 250,000, right? That's ideal. If you go into a market, obviously not in California. In fact, not even in a Midwest, or not even in the Sun Belt. You know, he's not in California. He's not in Arizona. He's not in Nevada. He's not in Utah. He's not in Idaho. He's not in the Northeast. He's not in the Midwest. He's not in the Deep South. But somewhere, I'll get to it momentarily. Okay, so if you can find a $250,000 home, by the way, you know, I mean, like we said, you know, national and regional builders, it's very hard for them to build a home this inexpensive and profit out of it. But there are some exceptions to the rule, and we can cover that for you momentarily. That's why Maureen is with me That's she will give you more details momentarily. So 250K purchase price, around 20% down payment. As an investor, you put 20% down payment minimum, $60,000, I think. Yeah, I mean $50,000 plus closing costs. Total, or whatever, 64,000. And if you can find a renter that can rent for like 1,600 per month, that's ideal. So at the end of the day, you minus few percent vacancy factor, and if you can find a market where the property tax is less than 1%, that's unheard of. If you can find a market that have a property tax rate that's less than 1%, that's another win for you, right, Maureen?
Yes.
Yeah, and also insurance, typical $50 per month, that's fine. Property management fee, 8 to 10%, that's okay. And because a new build have very low maintenance, is in a B class or even a B plus, B as in Bravo, B plus class neighborhood, you can get a quality tenant in there that's willing to pay you, that can pay you $1,600. At the end of the day, then you look at, even at a mortgage rate at 4.5% or even 4.6%, as an investor, you can still cash flow. So, and then, so therefore, your here are the numbers, right? Your gross rent of $1,600 per month minus your monthly mortgage, taxes, insurance, property management fee, and a small percentage of vacancy and occupancy factor. You have a monthly net cash flow of approximately $260 something monthly net cash flow, and a projection appreciation rate maybe 3 to 5%. Maureen, is that a good realistic expectation?
I would say historically, yes. Where we are at the moment in the low supply, high demand, it's actually double digit. But let's go with the conservative number, and so investors are pleasantly surprised if they get more than the average 3.
Right. So Maureen, so do you have anything to say on this, on the numbers I just concluded? Oh, by the way, the cap rate, we're not going to discuss all these formulas. Is kind of hard so some people to understand, but I'm going to say it anyway. The rent to value ratio is 0.8%. The capitalization rate is 6.1%, which is good. Cash and cash return 6%. And if the total return is 35%, because based on the appreciation rate of 5% in the first year, at the end of the first year, your annual net cash flow plus your projected 5% appreciation at the end of the first year equals your gross equity income of almost $19,000 divided by your down payment of $54,000 equals your total return at the end of the first year of 35%. And we only talk about first year return. I mean, if you hold this property beyond first year, which you should long term, 5 to 10 years, your total ROI will be 5 to 10x over time. So so Maureen, can you have anything to share about the numbers and the formulas I just shared on this typical very nice new build investment home?
So this is exactly the type of product that we offer, and you can find this type of product outside of your backyard. So if you are looking for a brand new home where you can find rents between $1,400 and $1,600 in markets where the property tax is less than 1%, that puts more money in your pocket through a cash flow perspective because you're paying less money out to property taxes, then this is what all makes sense. And I think what you're trying to do here in this video is really elucidate and show and inform investors that if your risk tolerance is really low and you don't want to buy a rehabbed home and you want to buy brand new construction, it is definitely possible to do that. You can find highly organized companies such as myself, Spartan Invest, on the ground in Alabama, in Tennessee, soon to be Georgia, where we are building brand new homes at that exact same price point. I don't know how you got that, Seewing, because it was amazing, but we are between $240,000 and $250,000 for a 3-bedroom, 2-bath, basically anywhere from 1,400 to 1,600 square feet. And you make a really good point, Seewing, is that the starter homes, construction companies do not make, the profit margins are so much bigger on those bigger, more luxurious types of homes. So they're going to spend, what they're going to invest their time is going to be in those higher end properties so they can make more money and do less of them. Whereas the starter home, which is your typical 1,300 to 1,500 square foot home, brand new construction, it's not a profit center for them. They have to do volume in order to be able to, produce the yields that they want to stay in business. So as a developer, as a construction company, you have to decide, where do you want to spend your time? And Spartan, we decided that we were going to start our own construction company, build brand new build to rent properties, build new communities, where in those communities, we allocate 70% to primary homeowners, but we do allocate 20% to investors who want to purchase. And then the other 10% we'll develop ourselves or sell to another construction company. We just have to see how that goes. And so far, the demand for our new construction has been exceptional, really exceptional. And I think it's due to newer, nicer, higher rents, better quality tenants, better neighborhoods, more consistent yields and returns. That's what investors are looking for. And quite frankly, there's been some internal discussions of us moving our business to 50-50, 50% new construction, 50% rehabs, just because the demand for the new product has superseded our expectations.
Absolutely, Maureen, I'll tell you, I mean, for those real investors out there, I don't care where you're located, whether California or whether you're located in New York City or Miami or Chicago. I mean, if you want to buy out-of-state property at the lowest risk possible, if on your own, if you're going to try to do it yourself, to buy this type of high value new builds, investment homes, your chance of succeeding is slim to none. I repeat, slim to none. Am I right, Maureen?
Because the competition is so fierce. I would agree with you. The competition is very fierce for the new product. People are getting outbid. If you're just seeking a local realtor and even if you're coming in with cash, you're getting outbid by other cash buyers, sometimes even international buyers that are coming in with loads of cash. And so aligning yourself with an operator, turnkey provider who specializes in new construction as well, then the likelihood of you having access, and that was the word you used earlier, having access to that new product available to you, that puts you in the driver's seat compared to just calling a local realtor who's trying to make deals with a bunch of other people as well. Whereas a turnkey operator is really focused on helping an investor build a portfolio. And if they want new construction and we have the product, then they've got direct access to it without having, there's still some competition, but less than if you were in the open market.
Exactly. One final thing is, if people listen to this presentation and you access to our network, Maureen's network and our network, then you have access. You don't have to compete against, you only can compete against our members, which is sometimes challenging, but hey, it's not like you're bidding, right? If you want it really bad, you can get one of these new builds. You have to be proactive and bug Maureen.
And I will say this, Seewing, I think that we're in the time that we are in right now is low inventory, high demand. Everyone knows that, whether it's rehabs or brand new construction, right? 3 years from now, 4 years from now, 5 years from now, is it still going to be as fiercely competitive for this scarce product? No, because we'll build our way out of it. It just takes time. And some of the things that you mentioned, the cost of transporting goods right now is extremely high. The labor shortages that you mentioned, the war that's going on, there's a lot of economic factors that are slowing down the production of new houses to be built. And so once we work through all of that, and it's going to take time, then we will eventually arrive at a place where we're at 6 months, 7 months, 8 months of inventory available. And then we won't have this fierceness of competition that we have for very little product. But again, if you align yourself within a network of, you align yourself with networks that have access to the things that you're looking for, the likelihood of you getting what you want has increased exponentially compared to doing it on your own.
Absolutely. With that said, thank you so much, Maureen, for your participation. And again, for those people listening to our podcast, all you gotta do is look at below our video, you will find the contact information for my network, the Yield Listed Network, and of course, Maureen McCann and her turnkey provider network, Spartak Invest. Thank you so much, everyone. Thank you for attending. Have a nice day. Bye-bye.
Bye.